Let's not forget that this is a closed-end fund. This is not an ETF. There is no creation redemption function to ensure that the net asset value of GBTC is reflected and trades right on its price. So it's premium or discount, and in this case, it is trading at a significant discount, is set by supply and demand in the market.
Right.
Now, one thing that I take issue with from that headline is if GBTC has to liquidate. The funny thing is, people who own GBTC already assume they own Bitcoin. So if GBTC turns around and has to liquidate, which I don't believe they will, the reality is the buyers of GBTC are already the people that own, or excuse me, of the Bitcoin are already the people that own the GBTC. You see, you have to unwind it from both sides of the trade. So a lot of these headlines are sensationalistic. Let's not forget that GBTC traded at a premium as high as 100%, i.e. twice the value of the Bitcoin that was held in the fund. And what happened is there was an arbitrage trade where hedge funds would be able to go in and lock their trade up for 6 months, but immediately mark to market a scenario for all these fudsters out there, where imagine you're a large hedge fund, or let's look at a long-term rather than hot money, a long-term investor like a pension plan. $6 billion is the current value of GBTC. $6 billion is a rounding error for a lot of hedge fund, lot of large pension plans. And I can think of a lot of them that need 1% exposure to Bitcoin, which is approximately a $6 billion investment. It would make a ton of sense to me as an arbitrage guy that I would start accumulating GBTC at these prices, i.e. a 40% discount, gain a 10% weighting, a 10% position in the trust, disclose that position to the open market, and then try to buy the rest of the trust at a discount so that eventually I own the whole trust, and then I unwind it and I put Bitcoin in cold storage. This is a possible strategy for some funds. I'm throwing that out there just to flip the FUD narrative of all this potential selling to. One thing I'll take an issue with is there's a very big difference between being a 30-year-old risk manager, a la Sam Bankman-Fried and his CEO, Caroline, versus a 30-year veteran of risk management. Okay, there's a big difference. Barry Silbert is much closer to the latter than the former. Yeah. The other thing that I would recommend that people understand in this, FTX was actually short Bitcoin, okay? Mm-hmm. The world is actually short Bitcoin. Whether they are hedging other altcoins using the king of the castle, which is Bitcoin, that's the way markets work. You're always short the index, meaning if you trade a long short equity fund, chances are you're short SPX or the S&P 500 versus long position in single names. That's how you delta hedge yourself or call yourself delta neutral. The reality is most times you're hedged and wedged. There's no difference with a lot of these hedge funds in the altcoin space that are using Bitcoin as their short position versus their altcoins, which are less liquid, less valuable, and they try and control the mark to market by always being the bid to support it. That was the FTX story, a Bitcoin consideration. So the way I like to consider it is the government or the tax authorities are providing me with a 50% incentive to buy Bitcoin. And then the third way I own it, which is in a smaller but not zero, is through GBTC. I've traded GBTC my entire Bitcoin career, which is about 7 years long now. I was selling GBTC when it was a premium because that's when you take advantage of the silly price. You sell a premium, and now I am picking away at the discount. I understand the concern, but let's look at that headline. Don't forget the people that own GBTC right now think they own Bitcoin. What if you say they were to liquidate the trust? Well, the buyers have a claim on it. That nets out. There is not 634,000 Bitcoin for sale, people. You do not understand the process. But people will write headlines as they try and create FUD and whatnot. Going back to the Luna situation, Luna brought us from, as far as I'm concerned, Bitcoin is at $70,000. Bitcoin, in my opinion, was cheap. I wasn't outright buying it with both hands. But the point is, people overthink this. Bitcoin is actually your insurance policy. And the fact is, the value of your insurance has gone up, but the price of your insurance has gone down. Should you be happy? Yes, sir, you should, because the world and the macro scenario has become a much riskier place globally since the Luna and 3 Arrows Capital. Because if you look at other macro assets, I mean, Facebook stock or Meta is down. It was down 75% year to date as far as I look. So you get these headlines, you get the people who are Bitcoin haters. It's all good. It's what makes a market. But what I like to think of is Bitcoin is your insurance. It's like fire insurance. You don't sell your fire insurance when the fire is approaching your back porch. Okay. The forest fire is now at your back porch. The value of Bitcoin as insurance has gone up, but the price of Bitcoin has gone down. You should be sitting there saying, company called 3IQ, which brought the first closed-end Bitcoin fund to the Toronto Stock Exchange that eventually morphed into a Bitcoin ETF, a pure creation redemption product that ensures that the net asset value of the ETF is reflected in the price. Now, in the USA, it's been a slower process. And one of the concerns is the ability to manipulate foreign markets, i.e. when Bitcoin trades, spot Bitcoin trades in Asia, that is not under the purview of the SEC. What is under the purview of the SEC is futures, Bitcoin futures. So they view the BITO product, which is cash settled futures on Bitcoin price, traded in Chicago, as being under SEC regulation and therefore comfort against price manipulation. I am of a different belief that I don't believe foreign markets are nearly as manipulated as the SEC may lean, if you will. I think it would have made sense, Paul, for this to happen sooner than later. But I'm not guys that are the other side of the trade for the BITO long position in the ETF. Well, obviously that's offset by a short position. So these things balance out over time. Liquidity in the market comes in various shapes and forms. I'm a believer that a Bitcoin ETF would be healthy. Spot ETF would be healthy for the US market because it would protect individual investors against some of the stuff that's happened on their exchange and everything like that. But it takes time for that to pass through the various channels in the USA. Gary Gensler understands the beauty of Bitcoin versus other blockchain technologies and other altcoins. That is a certainty. What is more difficult is for him to pass the product through the